Good afternoon, everyone. Welcome to the Enhancing Financial Business and Document Skills Workshop. I am delighted to see such a motivated group here today with us. My name is Miss Francis, and I am the Senior Manager of the Financial and Business Document Department at Century National. I will also have with me my Junior Manager, Miss Chambers, who will help me with the presentation and also the question and answer section in this workshop. Today, we have gathered here today to focus on empowering ourselves with skills, the necessary skills needed to perform at our maximum potential within the department. We'll be covering various key points that are crucial for accurate financial business document management. Throughout this workshop, we aim to enhance our skills in areas such as accurate data entry, validating documents, identifying discrepancies, managing adjustments and errors, preparing invoices, and much more. These skills are vital for maintaining the integrity of our financial records and also ensuring smooth operations within the department. By the end of this workshop, you will have the knowledge and tools to perform your task with greater accuracy, efficiency, and confidence. So let's dive in and make the most of this opportunity to develop our skills and contribute to success of our department and the organization on a whole. First, we'll be looking at withdrawals and deposits. Now, a withdrawal involves removing funds from a bank account, saving plans, pension, or trust. In some cases, conditions must be met to withdraw funds without a penalty. A penalty for an early withdrawal usually arises when a clause in an investment contract is broken. A deposit. This typically refers to the act of placing money or other valuables into a bank account, financial institution, or a smaller trust entity for safekeeping or as an investment. It involves entrusting funds to an organization that holds them on behalf of the depositor. Accurate entry and balancing of deposit and withdrawals are essential for maintaining proper financial records and ensuring the integrity of an organization's accounts. Here's an overview of the process. First, we're going to look at documentation. When a deposit or withdrawal transaction occurs, it is important to have supporting documentation. This may include deposit slips, checks, receipts, invoices, or any other relevant paperwork associated with the transaction. The second step is recording. The transaction details need to be accurately, stressing on accurately, recorded in the organization's accounting system or financial records. This involves entering the appropriate information such as the transaction date, amount, account or accounts involved, and any other relevant descriptions or references. The third step is verification. The recorded transaction should be verified to ensure accuracy. This can involve cross-referencing the supporting documentation with the recorded information to confirm that all the details match. Any discrepancies or errors should be promptly identified and corrected. Next, we move on to balancing. The organization's accounts need to be balanced to maintain accuracy and reconcile the transactions. This involves comparing the recorded deposits and withdrawal against the corresponding bank statements, financial institution records, or other relevant sources. The balances should match and any differences should be investigated and resolved. Reconciliation is the next step in the process. Regular reconciliation should be performed to ensure that the recorded deposit and withdrawals align with the organization's bank or financial institution statements. This process involves comparing the organization's records with the bank records and identifying and also addressing any discrepancies. Next, we move on to internal controls. Organizations often have internal control measures in place to safeguard against errors or fraudulent activities. These controls may include segregation of duties, approval processes, periodic audits, and other checks and balances to ensure the accuracy of deposit and withdrawal transactions. By following these steps and maintaining proper financial controls, organization can accurately record, balance, and reconcile deposits and withdrawals, which contributes to the overall financial health and integrity of the organization. Now we're going to move on to checks and credit card vouchers. Before processing any check and any credit card voucher, each employee should verify that they are complete and valid. This includes checking for proper signatures, accurate dates, and correct amounts. Establishing a checklist or a standard operation procedure (SOP) can help employees consistently verify the validity of these documents. If any discrepancies or irregularities are identified, employees should collaborate with the relevant department or stakeholders, such as the financial department or the issuer, to resolve the issue. By ensuring the validity of checks and credit card vouchers, the organization can minimize the risk of fraud and errors in any financial transaction. Before processing checks and credit card vouchers, it is essential to check their validity by verifying the signature, dates, and also the amount. Here's an overview of the process. The signature on the check and credit card vouchers should be checked for authenticity. This involves comparing the signatures on the check or voucher with the authorized signature on file for the account holder. If the signatures do not match or appear suspicious, further investigations may be required, such as contacting the account holder for verification. Dates. The dates on the check and credit card vouchers should be examined to ensure that they are current and within an acceptable time frame for processing. Post-dated checks, which are dated for a future date, may need to be held until the specified date before processing. The amount on the check and credit card vouchers should be carefully reviewed to ensure that they are accurately entered and matched the intended transaction. Any discrepancies or alterations in the amount should be investigated and resolved before processing the transaction. For checks, it is important to verify any endorsement or additional signatures on the back of the check. This ensures that the check has been properly transferred and endorsed by the payee or an authorized party. Credit card vouchers often have security features such as holograms, watermark, or special printing to prevent counterfeiting. These features should be checked to ensure the authenticity of the voucher by thoroughly checking checks and credit card vouchers for validity. Organizations can mitigate the risk of accepting fraudulent or unauthorized transactions. Now we're going to move on to the next slide, which shows a sample of a check. And as you can see, the check is labeled, broken down into the various parts. At number 1, we have the payer name and address. At number 2, we have the date. At number 3, we have pay to order of the payee. At number 4, we have the amount, that is the monetary figure on the check. Sorry, the amount box on the check showing the monetary figure. Then we have the amount line. This is the line where the check, the monetary figure is written in words. Then we have the bank information. That is the name of the bank. Then we have the memo line to tell you what the check is being paid for. Then we have the routing number. That's the special number for each financial institution. Then we have the checking number, which is the number on the check. So each check is numbered in chronological order. Then you have the check number. Sorry, the checking account number. Then you have the check number, which is numbered in chronological order. Next, we have the bank fractional, and then we have the payer signature line. Moving on to the next slide, please. We're going to be looking at discrepancies between invoices and source documents. Now, it is very important to identify and report any discrepancies between invoices and source documents to the appropriate person for resolution. Here's an outline of the process. So we have reviewing. The first step will be reviewing invoices and source documents. Now, when processing invoices, it is crucial to compare them with the corresponding source documents, such as purchase orders, delivery receipts, or contracts. The purpose is to ensure that the detail on the invoice match information in the source document. Then the next step will be identifying the discrepancies. During the review process, any differences or inconsistencies or errors between the invoice and the source document should be identified. This may include discrepancies in quantities, prices, description, or any other relevant information. Then we document the discrepancies. After identifying any discrepancies, it should be documented accurately, noting the specific details of the issue. The documentation serves as a record and reference for further investigation and resolution. Next is to report to the nominated person. After identifying the discrepancies, it should be promptly reported to the designated person or department responsible for resolving such issues. This could be a supervisor, accounts payable department, procurement team, or any other appropriate personnel within the organization. Continuing with discrepancies between invoices and source documents, the resolution process. Now, the nominated person or department will take the necessary steps to investigate and resolve the discrepancies. This may involve contacting the vendor or supplier, reviewing additional documentation, seeking clarification from the requester, or making adjustments to the invoice or source documents as needed. Next, we continue with communication and follow-up. Throughout the resolution process, effective communication is important. The nominated person or department should keep the relevant parties informed of the progress and outcomes of the discrepancy resolution. If required, they may coordinate with the vendor, internal stakeholders, or accounting personnel to ensure proper adjustment and accurate recording of the transaction. Invoices should be cross-checked against the corresponding Source documents, such as purchase orders or receipts, to identify any discrepancies. Employees should be trained to recognize discrepancies in quantities, prices, descriptions, or terms between invoices and source documents. When discrepancies are identified, employees should promptly report them to the designated persons or department responsible for resolution, such as the accounts payable team or the purchasing department. Timely reporting allows for effective investigation and resolution of discrepancies, ensuring accurate financial reporting and proper supplier or vendor relationships. It is also important to identify and report any discrepancies between invoices and source documents to the appropriate person for resolution. Now, we're going to look at some steps in the resolution process. So, reviewing invoices and source documents. When processing invoices, it is crucial to compare them with the corresponding documents, such as purchase orders, delivery receipts, or contracts. The purpose is to ensure that the details on the invoice match the information in the source documents. Identifying the discrepancies. Now, during the review process, any differences, inconsistencies, or errors between the invoice and the source document should be identified. This may include discrepancies in quantities, prices, descriptions, or any other relevant information. Now we're going to move on to adjustments and errors are identified, reported, and rectified in accordance with the organizational requirements. Now, adjustments and errors in financial and business documents can occur due to various reasons, such as data entry mistakes, calculation errors, or unforeseen changes in transactions. Employees should be vigilant in identifying adjustments and errors, even during routine tasks, and promptly report them. Reporting procedures should be established to ensure that identified adjustments and errors are communicated to the appropriate department or individual responsible for rectification. The rectification process should follow organizational requirements such as obtaining necessary approvals, documenting the correct action taken, and maintaining an audit trail of the changes made. Adjustments and errors should be identified, reported, and rectified in accordance with organizational requirements to ensure accurate financial reporting and maintain the integrity of the organization records. Now, the process for adjustments and errors to be identified in the organizations are: firstly, identifying adjustments and errors. Regular monitoring and reviewing of financial records, such as the general ledgers, accounts, balance sheets, and income statements, help identify any adjustments or errors. This can be done through internal audits, reconciliation process, or routine checks. Once adjustments errors are identified, they should be promptly recorded. So now this is the second step in the process. To the appropriate person or department responsible for addressing such issue. The next step is documentation. It is important to document the adjustments or errors thoroughly. This includes recording the details of the discrepancies, the impact on the financial statements, and any supporting documentation or evidence relating to the issue. Accurate documentation provides a clear audit trail and facilitates the rectification process. Next, the rectification. The nominated person, persons, or department responsible for rectifying the adjustments or errors will analyze the issue and take the necessary steps to correct it. This may involve making journal entries, revising financial statements, updating records, or initiating corrective actions. Next, we're going to look at approvals and authorization. Depending on the organizational structure and internal control procedures, the rectification process may require approval and authorization from appropriate individuals or levels of management. This helps ensure that the adjustments or corrections are in line with organizational policies and also adhere to any regulatory or legal requirements. The reconciliation and verification. After the adjustments or errors have been rectified, it is crucial to reconcile and verify the corrected records to confirm that they accurately reflect the organization's financial position. This may involve cross-checking the corrected balances, conducting additional reviews, or performing reconciliation to validate the accuracy of the rectification. By following these steps in accordance with organizational requirements, organization can promptly address adjustments and errors, maintain accurate financial records, and ensure compliance with relevant accounting standards and regulations. Next, we're going to look at invoices. Now, an accurate invoice preparation is essential to ensure proper billing, timely payments, and financial transparency. Employees should be familiar with the organization's invoice creation guidelines, including specific formatting, required information, and supporting documentation. Proper attention should be given to accurately capturing the details of goods or service provided, itemized costs, applicable taxes, and any discounts or terms. Before finalizing invoices, a review process should be implemented to verify the accuracy and completeness of information to avoid billing errors and potential disputes. When preparing an invoice, it is essential to ensure accuracy and compliance with organizational requirements. Now, let's look at the process. First, you gather the necessary information. So you collect all the information required to create the invoice. This typically includes details such as the customer's name, contact information, the products or services provided, quantities, prices, applicable taxes, and any other relevant billing terms or conditions. Now, the next step will be the formatting and the layout of the invoice. Now, the invoice should be designed in a clear and professional format that aligns with organizational standards. Include the organization's logo, contact information, invoice number, issue date, payment due date, and any other required elements. The third step is the itemized description. Provide a detailed itemized description of the product or services being billed. This may include item names, description, quantities, unit prices, and any applicable discounts or promotion. It is important to accurately capture the specifics of the transaction to avoid confusion or discrepancies. The next step we're going to look at is calculations and totals. Now, calculate the line totals, subtotals, taxes, and any other charges accurately. Double check all calculations to ensure precision and consistency. Include a clear breakdown of the amount to provide transparency to the customer. Next, we're going to look at the payment terms. Now, clearly state the payment terms, such as the acceptable payment method, due date, late payment penalties, and any other relevant information regarding payment procedures. Ensure that the invoice aligns with the agreed upon terms with the customer. Thoroughly proofread the invoice before finalizing it. And this is a very important step. Check for any spelling errors, typos, or formatting issues. Review the invoice to verify that it complies with organizational policies and meet any legal requirements or regulation related to invoicing. The last step in the process is delivery and documentation. Now, the invoice is to be sent to the customer through the designated communication channel, whether it be via email, post mail, or an electronic invoicing system. Keep a copy of the invoice for your records and to facilitate future reference or inquiries. Next. So by following these steps and adhering to organizational requirements, invoices can be prepared accurately, ensuring that billing process is efficient, transparent, and compliant. This helps to establish trust with customers, promote timely payment, and maintain proper financial documentation. Now we're going to look at sample of an invoice. As you see on screen, it is detailed, labeled, and up the top we see where they have the supplier's name. Beneath that, the recipient, the payment method is stated, the supplier contact information, also the invoice number and date is shown. We also see where they itemize and give description of the items that are being supplied, and also the total amount and the relevant taxes that are added to the items that are being supplied. This ends my presentation. I'm now going to turn over to Ms. Chambers, who will continue. Thank you.
All right, so good evening. I will be going through petty cash down to budgeting. So let's begin. All right, for petty cash claims and vouchers. So prior to processing a petty cash claim or an voucher, it is important to check them for approval, accuracy, and authenticity. For the approval, we must verify that the petty cash claim or voucher has been appropriately authorized. This involves ensuring that the claim or voucher has been approved by the designated personnel, such as a supervisor, manager, or authorized signatory who has the authority to authorize and release petty cash funds. Now, for accuracy of information, it is important that we review the petty cash claim to ensure that all required information is provided accurately. This includes details such as the date, purpose of the expense, amount, and any supporting documentation, such as receipts or invoices. We should also cross-check the information on the claim or voucher with the provided supporting document to ensure consistency and accuracy. Now, to make sure that it is authentic or the supporting documents are authentic, and we should examine the supporting documents such as receipts or invoices to verify their authenticity. Check for signs of tampering, duplicate submissions, or any other irregularities that may indicate fraudulent activity or unauthorized claims. Adequate documentation. Ensure that the petty cash claim is properly documented and includes all the necessary information required for record keeping and auditing purposes. This may include recording the payee's name, description of the expense, account coding, and any relevant notes or explanations. We should always comply with policies. This means confirming that the petty cash claim adheres to organizations' policies and guidelines for petty cash management. This includes compliance with spending limits, allowable expenses, and any specific rules or procedures related to petty cash disbursements. Reconciliation and verification. As a part of the overall petty cash management system, we should periodically reconcile and verify the petty cash claims against the remaining cash balance in the petty cash fund. This is to help ensure that the claims and vouchers have been processed accurately and that there are no discrepancies or irregularities. Petty cash claims should undergo a thorough review process to ensure they meet the organization's approval, accuracy, and authenticity criteria. Employees responsible for reviewing petty cash claims should verify that the claims are approved by authorized personnel and are within the established limits. Accuracy checks should be performed to confirm the claim expenses are correctly calculated, supported by valid receipts, and properly categorized. Authenticity checks may involve validating the legitimacy of receipts, ensuring they are not altered or forged, and cross-checking against organizational policies for acceptable expenses. So here we have a blank sample of the petty cash, the voucher number, the date, who we are paying out the petty cash to. Then we'll have the description, the amount, the sum of dollars in words, payment approved by and received by. Let's look at reports relating to budget or budgeting. Completing and distributing reports related to the budget within specified timelines and for specific periods and projects is crucial for effective financial management. Budget reports should be completed and distributed within the established timeline to ensure timely decision Budget reports should be completed and distributed within the established timelines to ensure timely decision-making and financial control. Employees should be aware of the reporting schedules and deadlines to prioritize their work accordingly. Adequate resources and systems should be in place to facilitate efficient report completion, including data collection, analysis, and consolidation. Collaboration with relevant departments and stakeholders is essential to gather accurate information and ensure comprehensive reporting. Let us look at what the process of completing a budget on time looks like. For timely reporting, establish a schedule for budgeting reporting, specifying the frequency and the deadlines for each reporting period. This could be monthly, quarterly, annually, or based on project milestones. Ensure that the reporting timeline aligns with the organization's financial cycle and the need and the needs of relevant stakeholders. All right. Budget data collection, collecting the necessary data to prepare the budget reports. This involves gathering information on actual expenditures, revenues, variances, and any other relevant financial data. Ensure that the data is accurate, up to date, and aligned with the reporting period. Reports preparation. Prepare the budget reports based on collected data. This may involve analyzing and summarizing the financial information, comparing actual results to budgeted amounts, identifying variances, and providing explanations or insights into the budget performance. Use appropriate financial reporting tools, software, or templates to ensure consistency and clarity in the reports. Review and approval. Review the budget reports for accuracy, completeness, and adherence to reporting guidelines and organizational requirements. Seek the necessary approvals from relevant stakeholders, such as finance managers, department heads, or budget committees to ensure the report meets the required standards. Once a budget report is finalized and approved, distribute them to the designated recipients. This could include department managers, executives, board members, project teams, or any other relevant individuals or groups. Consider the specific reporting requirements for different stakeholders and provide the reports in a format that is easily understandable and accessible. Periodic reports and specific reports. In addition to regular periodic reports, consider the need for project-specific budget reports. These reports focus on the financial performance of specific projects, initiatives, or departments, providing detailed insights into the budget utilization, project costs, and variances. Follow-up and analysis. Monitor the distribution of budget reports and ensure that recipients have access to the necessary information for their decision-making processes. Offer support and clarification when needed. Encourage feedback and engage in discussions to analyze the budget reports and facilitate proactive actions for budget management and improvement. By completing and distributing budget reports within specified timelines and for the relevant periods and projects, organization can enhance financial transparency, facilitate decision-making, and foster effective budget control and management. Let's look at what a budget consists of. Clear and consistent budget objectives that align with organizational aims and projects are crucial for effective financial planning and management. Budget objectives help align financial planning with the overall strategic goals of the organization. Employees involved in budgeting should have a thorough understanding of the organization's aims and projects to establish relevant objectives. Budget objectives should be specific, measurable, attainable, realistic, and time-bound, SMART for short, to ensure clarity and focus. Regular communication and collaboration within relevant stakeholders such as department heads or project managers can help ensure that the budget objectives align with their specific needs and priorities. So let's look at how an organization establish their objectives for budgets. One is by looking at an organizational aims and strategies, which means to clearly define the overall aims, objectives, and strategic priorities of the organization. These may include growth targets, cost reduction goals, revenue diversification, investment in specific projects, or other strategic initiatives. The budget objectives should directly support these broader organizational goals. Project identification and prioritization. It is important to identify specific projects, programs, or initiatives that align with the organizational aims and strategies. Prioritize these projects based on their strategic importance, potential impact, financial feasibility, and resource requirements. Formulate budget objectives that are specific, measurable, achievable, relevant, and time-bound. These objectives should outline the desired financial outcomes for each project or initiative. For example, a budget objective could include targets for revenue generation, cost containment, investment returns, or other financial metrics relevant to the projects. Collaboration and alignment. This involves relevant stakeholders such as department heads, project managers, finance teams, and senior management in the process of setting budget objectives, seeking their inputs and ensure that the objectives are consistent with their expectations and project requirements. This collaborative approach helps ensure buy-in and alignment among stakeholders. Let's look at reviewing and validation of a budget. Review the budget objectives to ensure that their clarity, feasibility, and alignment with overall organizational aims and projects. Validate the objectives against available resources, market conditions, and any external factors that may impact the budget. Make necessary adjustments or refinements based on this review. Communication and cascading. Clearly communicate the budget objectives throughout the organization. Ensure that all relevant parties, including project teams, department heads, and financial personnel, understand the objectives and how they relate to the broader organizational aims. Cascade the objectives down to the individual budget holders, providing them with clear guidance on how to align their budget with the established objectives. Monitoring and performance evaluation. Regular monitor the budget execution and track progress towards achieving the budget objectives. Establish key performance indicators, KPIs for short, and metrics to evaluate the performance and effectiveness of budget implementation. Make adjustments as necessary to stay aligned with organizational aims and project goals. By establishing clear and consistent budget objectives that align with organizational aims and projects, organization can ensure financial focus, resource allocation, and accountability. This promotes effective financial planning and enables strategic decision-making and facilitates the successful execution of organizational initiatives. So there ends the presentation. We're going to move into our question and answer section where we each ask each other questions. So is there any questions? The floor is now open.
Okay. Good evening, everyone. My question is for Ms. Renisha. Why is it important to check the accuracy of calculations and reconcile accounts?
Good evening again, Ms. McLaurin. So to answer that question, checking the accuracy of calculations and reconciling accounts ensures that the financial records are error-free, for one, and also to provide an accurate representation of the organization's financial position. It also helps to identify discrepancies, detect fraud or errors, and also allows for timely corrective actions to be taken. Hope that answers your question.
Yes, we do. And another question for you. What
Sure.
steps can be taken to maintain the accuracy of information in financial documents?
No, that's a very good question. Now, to maintain accuracy, it is essential to proofread financial documents thoroughly, double checking calculations, verifying data against source documents, and also utilize appropriate software or tools to minimize errors. Now, following established review processes, seeking feedback from colleagues and staying updated on industry best practices can also contribute to maintaining accuracy. That's it from you, Ms. McLaren?
Yes, that's it for me.
Okay, thank you much for your time.
You're welcome.
Good evening, everyone. My question is to Geneva. How can employees effectively communicate irregularities or errors in financial information?
Right, thank you for that question. So, an employee or employees should always report irregularities or errors promptly to the designated person or department responsible for resolving such issues. It is also important for the employee to provide clear and concise information about the irregularity, including relevant details and supporting evidence. Effective communication channels within the organization, such as email, internal messaging systems, or incident reporting tools, can be used for timely reporting.
Thank you so much. Second question to you, Ms. Chambers. Why
Okay.
is it crucial? Sure. Why is it crucial to relate to people from diverse backgrounds and abilities in a financial department?
All right. So relating to people from diverse backgrounds and the ability to promote inclusivity fosters a positive work environment, and it enhances collaboration within the financial department. It also helps to respect and value different perspectives, ensuring effective communication and encourage diverse thinking that can lead to improved problem solving and decision making.
Thank you so much, Ms. Chambers.
You're welcome. So now I have a question for you, Miss McLaren. Just checking to see what is it that you have learned throughout the presentation. From what you have heard, how can budget objectives to be aligned with organizational aims and projects? Ms. McLaren, are you still there?
Sorry. All right, thank you for that question. To align budget objectives with organizational aims and projects, it is important to have a clear communication and collaboration between the financial department and relevant stakeholders. Regular meetings, discussions, and consultations with department head, project managers, or executive can help identify the financial needs and priorities of different areas within the organization. This input can then be used to establish budget objectives that support the overall organizational goals. And here ends session.
Thank you, Ms. McLaren.
Welcome.
My question is for Ms. Welcome. What are some of the best practices for preparing invoices accurately?
Thank you so much for that question, Ms. Francis. Best practices for preparing accurate invoice includes ensuring that all required information is included, such as customers' details, itemized costs, taxes, and payment terms. Cross-checking information against supporting documents like purchase orders or service agreements can help minimize errors. Utilizing standardized templates or software can also help maintain consistency and accuracy in performing invoice preparation.
My next question is for sorry, Ms. McLaren,
Yes.
can you hear me? Okay. How can discrepancies between invoices and source documents be resolved? That's my question to you.
All right.
Ms. McLaren, we're not hearing you.
Let me touch it. All right, sorry about that. When discrepancies between invoices and source documents are identified, they should be reported to the nominated person or department responsible for resolution. This could involve liaising with the accounts payable team, the purchasing department, or the suppliers to investigate the cause of the discrepancy and work towards a satisfactory resolution. Clear communication and collaboration are key to resolving such discrepancy efficiently.
All right, thank you, Ms. McLaren. So my final question is for Ms. Welcome. What steps can be taken to rectify errors and adjustments in financial documents?
Thank you for that question, Ms. Chambers. To rectify errors and adjustments, employees should follow organizational procedures and guidelines. This may include obtaining necessary approvals, documenting corrective actions taken, and maintaining an audit trail of changes made. It is important to address errors promptly, communicate transparently, and implement preventive measures to minimize the occurrence of similar errors in future.
Thank you for that.
I will ask Renisha this next question, and then Geneva, and then Michelle will ask Geneva the final question. Renisha, how can data be presented in an easily understood format for budget reporting? Sorry. Did you hear me, Miss Francis? Miss Francis?
Could you repeat the question for me, please? I was having some.
Sure. How
You hearing me?
Sure.
You hear?
Yes, I'm hearing you now.
I was just asking if you could repeat the question for me. I have some difficulty hearing.
All right, no problem, we'll do. How can data be presented in an easily understood format for budget reporting?
Okay, that's a very good question, Ms. Welcome. Now, data can be presented in an easily understood format by utilizing visual aids such as charts, graphs, or table It is important to organize data logically, use clear headings and labels, and also provide necessary context to aid comprehension. Choosing appropriate software or tools to facilitate data visualization can also help in presenting complex information in a concise and accessible manner. Hope that answers your question.
Thank
Okay.
you.
Okay, my final question is to Ms. Chambers. What is the significance of the significance of verifying the validity of checks and credit card vouchers before processing?
All right, thanks for that question. Verifying the validity of checks and credit card vouchers before processing them helps to mitigate the risk of fraud, errors, or unauthorized transactions. It also ensures that the payment instruments are genuine, properly authorized, and comply with the organization's policies and procedures. This verification step also helps to protect the organization's financial assets and maintain financial control. All right, so this is the end of our question and answer section. It is also the end of our workshop. I hope that we've all learned something valuable to take back and improve upon in the organization. So I want to thank everybody for coming, and we will see each other again.
Thank you.
Yes.